Hello everyone, here are the latest market news on July the 5th, 2019. GM's sales decreased 12% in Q2 in China. General Motors Co.'s second quarter vehicle sales in China fell 12.2% as the U.S. automaker was hurt by a slowing economy amid the Sino-U.S. trade war and by heightened competition in its key mid-priced SUV segment. GM stated that they delivered 753,926 vehicles in China in the April-June period this year. The drop for the quarter marks the fourth straight quarterly sales decline for GM in China, the world's biggest auto market. GM sold 3.64 million units in China last year, down from 4.04 units in 2017. Around two-thirds of the about 20 new and refreshed models will arrive in the second half, with a sharpened focus on luxury vehicles and mid-size to large SUVs. A GM spokeswoman told Reuters, adding more than a half of the new launches will be new models. Global stocks fluctuate on expectant jobs data. Stocks and bonds were mostly in a halting pattern as investors await the key U.S. jobs report. European equities marked the biggest fall in a week, with the Stoxx Europe 600 index declined 0.2%, breaking a six-day winning streak. Meantime, Euro slipped after German factory orders came in far weaker than expected. Futures on the S&P 500 were slightly lower along with shares across Asia, though benchmark in Tokyo and China rose. Australian equities surged. The 10-year U.S. Treasury yield was steady near a two-and-a-half-year low at 1.95%. The American employment report may help to shape expectations for the Fed's meeting at the end of this month, though it would take a significant rebound to shake the market's conviction and the central bank is poised to lower rates. German industrial sector experiences orders fall. German industrial orders fell far more than expected in May, and the economy ministry warned on Friday that this sector of Europe's largest economy was likely to remain weak in the coming month. Data from the economy ministry show that contracts for goods made in Germany were down by 2.2% on the month after rising slightly in March and April. These numbers are lower than the consensus forecast for a 0.1% decline. Germany's troubles, some of which are linked to the car industry, have weighed on the euro region. On Friday, Commerzbank changed its forecast on ECB stimulus, predicting a 20 basis point cut in the deposit rate this month, larger than previously anticipated. Gold marks the longest weekly gains since 2011. Gold is headed for the longest stretch of weekly gains since 2011 as investors expect the release of a highly anticipated U.S. jobs report that could provide clues on the Federal Reserve's interest rate path. The non-farm payrolls data later on Friday is forecasted to show a rise of 160,000 in June, upper than 75,000 a month earlier. Chris Baston, head of research at Pepperstone Group Ltd. in Melbourne, said that it would take an absolute blockbuster result to change the view that the Fed will cut rates at its next meeting. Spot gold climbed as much as 0.6% to $1,424.30 an ounce and was at $1,414.79 at 2:08 p.m. in Singapore. Prices are up 0.3% this week. Bullion hit $1,439.21 on June the 25th, the highest level since 2013. Veteran investor Mark Mobius said prices could top $1,500 an ounce, citing lower interest rates among the factors that are supporting bullion.